All right, so in this lesson, we're still talking about the Elliott Wave Theory, but we will be adding the Fibonacci extension and Fibonacci retracement into it. So we already talked about the Fibonacci sequence, Fibonacci retracement, Fibonacci extension in the previous lessons. We explained it, I showed you how it works and what it is. But in this lesson, I'll start applying it to the actual charts, and I'll show you how the Fibonacci retracement and how the Fibonacci extension, how significant it actually is, but also how it works within a trending market, and mainly how beautifully it works with the Elliott Wave Theory. So this is something that, again, we're building on top of that Elliott Wave Theory by adding Fibonacci into it. And in the next lesson, we're going to add multi-time frame analysis into it. And at that point, you're going to have a really, really strong foundation moving into the next lessons, and specifically the strategies. So this is one of the most important lessons, I would say, before moving into the actual strategies, because it will show you a lot of what you will learn in the actual strategy lesson. So very important, pay attention. But right now, what I'm going to show you is, again, how to apply the Fibonacci retracement and the Fibonacci extension within the Elliott Wave Theory. Let's have a look. So as I just mentioned, this is really important information, because the way I'm going to explain this right now is going to build on top of what we're going to learn specifically in the strategy lessons. This is very, very, very relevant. So when you look at this example here on the chart, what we have here is, again, we have a bearish trend. This is a monthly time frame, so this is a bearish trend on the monthly chart. And when we start applying the Elliott Wave Theory into it, check it out. Wave 1 is the breakdown. Wave 2 is the pullback, which is the retest. We have a beautiful high-test reversal, and then we start falling back. And then it consolidated a little bit, and then we finally started to fall down. But this is still a Wave 1 breakdown, Wave 2 pullback, Wave 3 run, Wave 4 complex pullback, right? Simple pullback, complex pullback. You can obviously see the difference here. And then a wave, so this is Wave 4 finishes, Wave 5 run, okay? So the way that Fibonacci will work into this is that we obviously have Fibonacci retracement and Fibonacci extension. We learned previously that Fibonacci retracement measures the pullback, right? So that'll be Wave 2 and Wave 4. Wave 2 is a pullback wave, and Wave 4 is a pullback wave as well. So we will be using Fibonacci retracement to measure the pullback. Fibonacci extension measures the run, right? So Wave 1, Wave 3, Wave 5. We're mainly going to be focusing on Wave 3 and Wave 5 when utilizing Fibonacci extension. It's really hard to predict Wave 1 when it happens. If it just Wave 1 happens, and then we know that a new trend is beginning. And at that point, we're going to be using retracement on Wave 2, extension on Wave 3, retracement on Wave 4, extension on Wave 5. Let me show you how that looks like on the charts. So this is Wave 1 breakdown. So now we will be looking for a Wave 2 pullback. So we'll be utilizing the Fibonacci retracement for that. And it beautifully rejects 0.382 fib, and then it starts falling down for a Wave 3 run. So to measure a Wave 3 run, we will be utilizing, again, a Fibonacci extension from the recent high to the recent low of Wave 1 to the pullback of Wave 2, which plots potential targets. Fibonacci extension just gives us potential targets. And a lot of times, a good target for Wave 3 would be 1.272 or even 1.618. In this case, you can see that I beautifully rejected 1.272. Then it's Wave 4 pullback. Now at that point, again, we'll be using Fibonacci retracement from the top of Wave 3, right, to the bottom of Wave 3, which will look something like that. And then you can see, again, it beautifully pulled back. Wave 4 ended at 0.32 Fibonacci, and then Wave 5 has begun. So to measure, again, Wave 5, we will go to the top of Wave 3, to the bottom of Wave 3, to the top of the pullback of Wave 4, and that gives us some potential targets for Wave 5. And you can see that Wave 5 is still not finished. It has broken the previous lows here, so it could very well continue lower all the way down to 0.618. So I'll come back to this. Yeah, this is kind of what it would look like. So it would potentially continue going all the way to 0.618. So this is just an example of how it looks like after the fact, after it has already happened, right? Obviously, we're going to be applying this in real time as Wave 1 happens. At that point, we're trying to figure out where Wave 2 will end, right? And when wave 2 ends, at that point, we're figuring out the potential targets for wave 3 as it's happening in real time. So this is just a quick example. I'll come back to this example after I actually draw it out and explain this concept in a little bit more detail. So let's dig into that. All right, so now that when we draw this out, obviously wave 1 is the beginning of a new trend, right? Always got to remember that. Wave 1 is the breakout wave. That's when the new trend begins. So obviously we got to assume that a trend has just ended. So let's draw in a wave 5 over here. Let's just assume this is at the end of a wave 5 as an example, right? And let's just say a trend typically ends with some kind of a price action pattern. We already looked at price action patterns, so let's just draw in a descending triangle. All right, so we have a descending triangle, and then wave 5 is now decelerating. This is still wave 5, it's decelerating, slowing down within a triangle pattern, in this case a descending triangle, getting squeezed until we finally break out to the upside. Previous highs, higher high, right? So now we just developed a brand new, potentially a brand new trend, a breakout. So the bearish trend that we had here has finished with this wave 5, and now we're in a wave 1 breakout. So let's just put in some text here just so we know this is a wave 5 has been completed right there. I'm just going to put in the letter 5 or the number 5. And now this is the breakout. So we got a wave 5 has finished, and this is the wave 1 breakout. So if we just take this and put it right here as a wave 1, we can all know that this is now the wave 1 breakout. So whenever we see this on a chart, we now need to expect that a wave 2 will be coming, which is the pullback wave. Now at this point, let's assume price action is decelerating and slowing down, and we believe that a pullback is now coming. So this is when we will be utilizing our Fibonacci retracement to figure out where the pullback will end. And based on backtesting and experience and the Elliott Wave Theory itself, typically a pullback wave, a wave 2, will end somewhere around 0.32 Fibonacci, which is this first line, 0.32, 0.5, 0.618 is the last green line over here, right? So wave 2, majority of the times from what I found, ends at 0.382, but it could obviously go all the way down to 0.618, right? But let's just say most common for me, in my opinion, is wave 2 ends at 0.382 Fibonacci, which is right there. So at this point, let's put that as a wave 2 has been completed. So this is now wave 2. And now we need to predict where the wave 3 target will be, because now this is the beginning of a wave 3. And at that point, that's when we utilize Fibonacci extension. So Fibonacci extension, again, is utilized from the recent low, right, to the recent high, to the pullback. And that gives us some potential targets, like that. So at this point, we're predicting that a wave 3 run is happening, and typically a wave 3 run goes all the way to either 1.272 or 1.618 Fibonacci extension. So let's just take this all the way up to 1.618 Fibonacci extension. Let me actually make this a little bit larger. So here we go, wave 3, let's just say it ends at 1.618. This is a lot of times an ideal target for a wave 3, and like I said, 1.272 is another really good target for a wave 3 run. But remember, the wave 3 run is typically the largest run out of all the waves. We have 5 waves, 1, 2, 3, 4, 5. Wave 1, wave 3, wave 5 are the runs. Wave 2 and 4 are the pullbacks. So whenever it comes to runs, wave 3 is typically going to produce the largest move within that trend. So wave 3, again, ideal targets 1.272, 1.618. This is important information for you guys to know. And again, we'll be coming back to this later in the lessons as well. So now let's mark in our wave 3 has concluded. Wave 3 is right there. So whenever a wave concludes, typically that means it's decelerating, it's slowing down at some kind of support and resistance, and we have reversal candlestick formations and maybe even a drop to the downside, right? So to figure out that a wave has been concluded, obviously we're looking for resistance, candlestick formation, deceleration, and a push to the downside. And at that point, we know wave 3 has now ended. So now we're obviously predicting wave 4, right? Which is the pullback wave. So where will that go? So wave 4 will be drawn again from the bottom of wave 3. We're using Fibonacci retracement because it's a pullback, to the top of the wave 3. And now it gives us a projection. It can go all the way down to 0.382. That is often a very good pullback. Whenever a pullback happens to 0.382, that is ideal. However, it can obviously continue going to also 0.618. It can have a much deeper pullback all the way to 0.618. Now, let's assume this is actually a complex pullback, as we learned in the previous lessons, right? Because wave 2 over here was a simple pullback. It just had a straight pullback. So wave 4 can be a complex pullback. It's typically one or the other. So let's just assume it bounces off of wave 3, or off of 0.32, I mean. Pops to the upside, but it forms a lower high and continues further all the way down to 0.618 as an example. And at this point, wave 4 concludes at 0.618 Fibonacci. And now we just completed wave 4. Let's just say we decelerated, we slowed down, we have a reversal candlestick formation and some momentum to the upside, right? So now we believe that a wave 5 is beginning. So now we got to figure out the wave 5 target. How far could wave 5 go? It's typically the last wave within a trend. So to measure the run, again, we're using Fibonacci extension now, not Fibonacci retracement. So to use Fibonacci extension, bottom of wave 3, top of wave 3, pull back to wave 4, right? And now it projects some potential targets. So a lot of the times, you can see how perfectly this lines up. A lot of times, the best target for wave 5 will be the previous highs, the highs of wave 3. In this case, that's 0.618. Obviously, if the pullback ended if wave 4 pullback ended at 0.382, that just means that the momentum is so strong, that the trend is so strong. So then the potential target could be obviously right there, 0.618. It would look a little bit different. That means this would just continue going up when it rejected 0.382, right? But in this case, it went down to 0.618 because it was a complex pullback. So wave 5 run, best target, typically the previous high of wave 3 or 0.618, or if you want to push it further, 1.0. Going further than that becomes a little bit tricky, a little bit riskier. So a lot of times wave 5, the maximum I would push wave 5 would be 1.0, and based on the Elliott Wave Theory, that's also one of the best targets. So best targets for wave 5, 0.618, 1.0. Best target for wave 3, because it's the largest wave out of them all, a lot of times becomes a 1.272 or 1.618 instead of 0.618 and 1, right? Wave 3 goes farther than 1.0, all the way up to 1.272 or 1.618. Whereas wave 5 goes either to 0.618 or 1.0 and does not continue to 1.272 or 1.618, right? That's the difference between wave 3 and wave 5. So that's it. Now we have it mapped out. This is how you use Fibonacci retracement, Fibonacci extension with planning where the trend will, how the trend will continue, how the waves will continue, where the pullbacks will end, where the potential targets will be of wave 3, the targets of wave 5, where the potential pullback of wave 2, pullback of wave 4 will end, and so on. This is how we again plan our potential targets and the potential pullbacks within a trending market, right? So right now it can be pretty complex. I know that if you're watching this for the first time, you might not understand it right from the beginning, and that's okay, because again, we'll be looking at this over and over and over again as we move into the strategies and even after the strategies. And this is something that eventually you'll become very familiar with. So that's kind of it. You know, this is again what a trend looks like. We have wave 1, wave 2, wave 3, wave 4, wave 5. So let's just toss that in there, that this is now the end of wave 5. So this is how it all looks. And I know it's pretty messy with the fibs in here, the Fibonacci retracement and extensions, but again, that's how it looks like. And this over here was an ABC pullback. Let's just toss that in there. So A, B. So this is again a complex pullback. And just since we're already writing all of this down, let me just mark one more thing for you. Right, so this wave 2 is a simple pullback. And this wave 4 over here, let me just mark it beside wave 2. There it is. So that was a simple pullback. And then wave 4 is now a complex pullback. And as we discussed earlier in the previous lesson, obviously they can be switched. Sometimes a wave 2 is a complex pullback, has this ABC pattern. And then if that's the case, then wave 4 will be a simple pullback. That's typically how it works. And that's something that, again, we discussed in the previous lessons. So that's it for now. We'll come back to this drawing in a second, but let me show you some examples first. So when we look at the examples now, right away, just looking at this time frame, this is again the initial example that I showed you on a monthly time frame. So let's remove all of this. Again, here's what it's supposed to look like. Wave 1, wave 2, wave 3, correct complex pullback, wave 4, wave 5, and we utilize Fibonacci retracement, extension, and so on. Right now, we can do this in real time. So if we were to do this in real time, check it out. We have wave 1 breakout, looks like that. So wave 1 is the breakout wave. So now when we have the wave 1 breakout, we're using Fibonacci retracement to figure out where will potentially wave 2 end. So wave 2, obviously the best rejection or the best pullback for wave 2 would be somewhere around 0.32 Fibonacci. And you can notice that the monthly 50 EMA is also lining up in that area. A lot of times that's what happens. Whether it's a wave 1 breakout on a 1-hour chart or a wave 1 breakout on a 4-hour chart or a daily chart or a monthly chart, doesn't matter. 0.32 a lot of times lines up with the 50 EMA. And when we dig into the strategy lessons, you'll actually know why. And that's a very important point. But in this case, wave 2 is typically going to end at 0.32 Fibonacci. So let's see in real time how that would look. And here's that pullback. So now we have a heightless reversal rejecting 0.32 Fibonacci and the monthly 50 EMA. This is the wave 2 finishing. So let's type in wave 1 breakout right here. And over there we have obviously the same thing, but potentially a wave 2 finishing. We don't know whether this wave 2 has finished yet. So let's see. And now we know it has finished because now we have this bearish momentum to the downside. So at this point, we will be utilizing Fibonacci extension to figure out the potential target of wave 3. How far can wave 3 actually go? So to use Fibonacci extension, again, highs of wave 1, lows of wave 1, to the pullback of wave 2. And now we have potential targets for Fibonacci extension. For wave 3, utilizing the Fibonacci extension. So a lot of times wave 3, like I mentioned, will go down to 1.272, it's the largest wave, or 1.618, that will be the farthest. So let's see what happens. So we drop down, we consolidate a little bit, and then we continue with the wave 3 run, and we're continuing to drop. Let's actually zoom in on this. There we go, and we need to extend our Fibonacci extension. And let's continue. So there we are at 1.272, and we're slowing down, decelerating, and boom, pop to the upside. So now we know wave 3 has finished, and it has finished at 1.272, which is exactly what it's supposed to do. It's either going to finish at 1.272 or continue down to 1.618. Obviously, there's going to be times when it can finish at 1.0 or it can be cut short, but majority of times the ideal will be wave 3 finishes at 1.272 like it did in this case, or it continues down to 1.618. So in this case it finished right there, so let's just mark this as the end of wave 3. There we go, and now the pullback is happening. So in this case we'll be utilizing Fibonacci retracement to figure out how far can this pullback go. And to do that, we'll be utilizing Fibonacci retracement from the top of wave 3 to the bottom of wave 3. Here we go. And then it kind of presents 0.32 over there, and it can obviously go all the way up to 0.618 as well. So anywhere between this Fibonacci retracement area, that's where wave 4 can finish. So let's see what happens. So we consolidate and consolidate and consolidate, and then here we're rejecting the monthly 50 EMA and 0.3 to Fibonacci at this point. But we don't know whether that's a clear rejection yet. And now check it out, really good candlestick formation. So we have, this is kind of like a hammer reversal right there. And this is a bearish high test reversal. Great, epic. At 0.3 to Fibonacci, at the monthly 50 EMA. So at this point, we can pretty much predict that this can be the end of wave 4. Obviously, it's not fully confirmed. Confirmation will be when it's falling down. But this is already when we can start planning wave 5 run, right? So let's just put number 4 in there, that this is potentially the end of wave 4. And now we will be utilizing again Fibonacci extension to measure the potential target of wave 5. So let's do that. So to use Fibonacci extension, in this case, it will be the top of wave 3 to the bottom of wave 3 to the pullback of wave 4. And that gives us some potential targets. First one being obviously 0.618. But as I mentioned, a lot of times a good target for wave 5 will be the previous lows, the lows of wave 3. And the main target could be 0.618. So you should watch out the bottom of wave 3 as a potential target region, but you can potentially push it all the way down to 0.618. So let's see what happens in this case. And sorry, the last potential target will be 1.0, and this will be like an extended wave 5. So previous lows, good target. 0.618, I would say the best target. 1.0 would be like an extended target. In this case, let's see what happens. So it's fallen, had a little more consolidation there, but it rejected it again with now a bearish engulfing. So now it starts to fall. And at this point, you can see it kind of broke the previous lows. So this was what? If you look at price action patterns, what do you guys think this is? Just think in your mind as I draw it in. This is now, it's not a flag, but kind of. I mean, it's kind of a flag rising wedge price action pattern, right? And then we get this break to the downside. And at this point, finally, wave 4 has finished. Wave 5 has begun as we broke out of it. So now we're fully in wave 5, falling to the downside. And you see, we're stopping at the previous lows. This is why I mentioned that the previous lows, the lows of wave 3, a lot of times can be a really good target for a wave 5. You can even see in this example, it's slowing down at that at the lows of wave 3. But let's see what happens. We continue. We now have broken down those previous lows, or potentially are starting to break down. Yeah. So now we're breaking down, and this is the end. So this month is still continuing, and we're at real time right now. So I don't know where this will go, but you can see it has already broken the lows of wave 3. So chances are, again, the best target for this would be 0.618. So chances are this can continue going all the way down to 0.618. So that's how you would do this in real time, right? As it's happening on the chart, that's how you use Fibonacci retracement to measure the potential pullback of wave 2 and pullback of wave 4. And that is again how you use Fibonacci extension to measure the potential run of wave 3 and the potential run of wave 5. That's exactly how it's going to be played out. So now let me show you a few other examples real quick. So in the second example, I'll just show you how it's actually done again by breaking down the Elliott Wave Theory and the Fibonacci retracement. I'm not going to go in real time just because it's very time consuming, and I want to show you a bunch of other examples real quick. But now if you look at this example right here, it's a little bit messier. So I wanted to show you again how a chart can look like being a little bit messier and not so clean as the previous one. But again, we have this bullish trend over here. price action is riding this trend line. So when it actually finally started to break down and consolidating sideways, this can be seen as a wave one breakdown, right? So wave one breakdown, at this point you will be utilizing your Fibonacci retracement, and you can again see what's being rejected. 0.382 is being rejected beautifully, and right here what you can see is the break and retest of the trend line with a high-test reversal and 0.382 Fibonacci as well. Zoom in on that. Right, so we can see this as the start of wave 3 now. So if we mark it in, this is wave 1 breakdown. This would be now a wave 2 pullback. There we go. And now wave 3 run. So to measure out wave 3, again, we're looking at Fibonacci extension, so to the previous, so from the highs of wave 1 to the lows of wave 1 to the pullback of wave 2, and it gives us Fibonacci extension targets. In this case, you can see beautifully it continued, broke through 0.618 like it's supposed to, broke through 1.0 like it should. This is again wave 3 being the biggest run there would be. It even smashed right through 1.272, which is the first major potential target for wave 3. And you can see in this case, in the previous example, it rejected 1.272. In this case, it's rejecting 1.618 beautifully. You can see it's stalling perfectly at 1.618. And at this point, when we had this massive pop to the upside, I mean, now this is the end of wave 3. So let's toss that in there. There we go. So this is like the end of wave 3. And now we're measuring the wave 4 pullback. So that would be Fibonacci retracement from the top of wave 3 to the lows of wave 3. And personally, this is like a massive volatility hit. I wouldn't really call this, because this was literally something that happened within, it was really quick. So the majority of the consolidation happened right there. So I would just draw my Fibonacci right to that consolidation point, because that's where it actually stopped, and this was just a random volatility spike. So we measured our Fibonacci retracement, and you can see again, wave 4 had a pullback all the way to 0.382. Perfect. And you can see in this case, inside bar, high test reversal, starts to crash down. And drawing a little phase line or this little trend line in here, connecting the lows. And you can see right here, as this bearish candle broke that, that is the start of wave 5, right? So wave 4 has now concluded right here, and we started wave 5, right? So check it out. To measure wave 5 now, again, we'll be utilizing Fibonacci extension from the highs of wave 3 to the lows of wave 3, which again, I'm just gonna measure it as this consolidation area instead of this random wick. A lot of times we will be measuring it from the lows, but again, this was just a random kind of crazy volatility spike. And then potential targets. Check it out, beautiful. Beautifully rejected 0.618, which is the best target for wave 5, right? Now let me jump back and actually show you in real time how this all plays out. Now that we have it all mapped out, right? Check it out. So wave 1 breakout, wave 2 pullback. I'll clear it real quick just because this was a really nice example actually. So I want to show you really quickly in real time what that looks like. So this was the wave 2 pullback. It finished, rejected 0.32 Fibonacci retracement. It was the break and retest of this trend line, gave us a nice high test reversal. So again, just as a quick explanation, we're using Fibonacci extension now to measure the potential run of wave 3, right? And again, wave 3 can finish at 1.272 or 1.618, right? And if we fast forward in this case, see we're falling beautifully here. Quick consolidation at 0.618, which can happen, right? A lot of times we might get consolidation at some of those levels. A little bit of consolidation at 1.0, and then it continues to break right through 1.272 and stalls at 1.618. So ideal targets were hit. So even if you were targeting and you had a target set at 1.272, would have been executed beautifully. or if you had a target set at 1.618, would have been hit beautifully. In this case, price still slowed down, consolidated. This is where we get that random wick, that random spike. And this is the end of wave 3 now, right? So wave 3 has finished right here. And again, we use Fibonacci extension to measure that. So let's just put it down as the end of wave 3. And now we're measuring wave 4. So to measure the pullback of wave 4, we're drawing Fibonacci retracement from the tops of wave 3 to the bottoms of wave 3. And again, I'm not going all the way down to the wick just because, like I mentioned, that was a crazy volatility spike. So I'm just drawing it from the lows of the consolidation, which was right there. And now we're measuring the pullback of wave 4, saying it's potentially going to go to 0.382. It might obviously go higher, but 0.382 being the most ideal. And there we go. We rejected 0.382 with an inside bar, high test reversal, and started to break down as we broke this little trend line connecting the lows of wave 4. Now we are fully in wave 5. So right now, to predict wave 5, we're using Fibonacci extension from the top of wave 3 to the bottom of wave 3 to the top of the pullback of wave 4. And now we have a potential target of 0.618, right? So again, good target for wave 5 is the lows of wave 3. The best target would be 0.618 for wave 5. The second largest target would be 1.0, okay? And in this case, let me just mark this down as the end of wave 4. Right here. And in this case, we're accelerating to the downside already. And see again, see how we got consolidation here at the previous lows? This is what I mean. A lot of times the lows of wave 3 can be a really good target for a wave 5 run. A lot of times we do get consolidation at the lows of wave 3, right? Just like we have seen in the previous example, just as we are seeing right now. But a lot of times the best target is again 0.618. So it can consolidate and then it can fall to 0.618. So in this case, it consolidated and again, it broke the previous lows just like we have seen in the previous example. And now we're accelerating to 0.618. Check it out, we even had a little break and retest. So if you make this as a horizontal support level, right? Breakdown, retest, tweezer tops, right? So we're looking at the candlestick formation now. And lots of consolidation, but we just hit 0.618, right? As the potential target of wave 5. Now look at it, we even rejected with a low test reversal and popped to the upside. And now wave 5 has finished. We're breaking out. You can see we're fully breaking out to the upside. We have some deceleration here that's going on. You can maybe even draw in a falling wedge type of price action pattern, right? It's being squeezed in, and then we have this breakout to the upside. So this is now the end of wave 5, and we have just concluded a trend. So this is again how it's done. This is how it's done in real time, right? Utilizing Fibonacci retracement and Fibonacci extension. You see how perfect it is, right? So this is again proving that financial markets are not random, they're not chaotic. They have patterns within them that continue to repeat on a regular basis. These patterns are these waves, right? Wave 1, 2, 3, 4, 5. Wave 1, and then we have a simple pullback and a complex pullback. You can even see in this case, wave 4 is this complex pullback. We have this A, B, C, and then we break down to wave 5. Wave 2 in this case is a little bit weird, right? Because it's a lot of consolidation sideways. So it can look this way as well. Just so you know, it's not always perfect. It's not always going to be perfect. It can be a little bit messy here and there. But in general, as long as you follow this general idea, this general theory, which the Elliott Wave Theory is, so as long as you follow this general theory, you'll do really well by predicting where the potential target, where the potential pullback will end for wave 2, wave 4, and where the potential targets for wave 3 and wave 5 are. It's very helpful if you know this information. And then later when you actually dig into the strategies, which is interesting because I did not know this when I built my strategies. This is something that I learned later at the end of it all. And it was just a beautiful confirmation of my strategies, because literally this is all over within my strategies without me even knowing it until after the fact. So it's nice that I'm showing it to you right away, right here, so that later when we dig into the strategies, we can actually talk about how the Elliott Wave Theory is applied within the strategies themselves, and it's very helpful. So that's kind of it. And right now I can show you a couple more examples real quick. I'm just gonna bang them out just so you get another really good feel for it. So let me show you one more. So check it out. Here we have another bearish trend in the market, and it started pretty much over here. So as I mentioned, a lot of times wave one is the breakout wave, right? But we could also get a lower high. So check it out. In this case, we had this massive pop to the upside, and then over here we had this lower high. So as soon as we had a lower high, that means that a trend change is occurring, right? Because we have a lower high in the market. So that means that potential trend change is actually happening. So when this lower high here occurred, you can mark this down as this is the wave one, the initial wave of a bearish trend, and this is a wave two, right? So it's not always wave one, a full breakout. Sometimes wave two is the first sign of a trend change, just like in a head and shoulder pattern. The right shoulder is the first sign of a trend change, right? We looked at that before in the price action pattern lessons. So just like same kind of idea here. This right here in this example, wave two is the actual trend change. Instead of wave one is the breakdown and the wave two is the retest. In this case, wave one, wave two is the trend change because it formed a lower high. So how did this play out? So if we utilize Fibonacci retracement, you can see here again, rejected this general region, 0.32, it fell, moved a little bit higher to 0.5, but we had this massive rejection for bearish engulfing, right? And let's do this in real time real quick. Right, so we had this beautiful rejection, and now again, utilizing Fibonacci extension, so tops of wave one to the bottoms of wave one to the pullback of wave two. And now let's figure out where will be the potential target for wave three, right? So we're looking at 1.272 or 1.618. Let's see real quick what happens here. So we stall at 1.0 and we continue, do we? So lots of consolidation at 1.0, and then boom, we hit 1.272. Do we go farther? Boom, we hit 1.618. Gorgeous, right? So right now we're slowing down, we're decelerating on this 1.618 level, and look, we're even breaking it. So sometimes the waves can be extended. Sometimes we can have an extended wave 3 or an extended wave 5, right? But the main idea is that a lot of times it hits 1.272, it hits 1.618, a lot of times it stops at those levels. But even if we have our targets placed at those levels and it continues farther down, that's still okay because our targets were hit, right? So that's the main idea. As long as we make money, as long as the targets are hit, great. So in this case, the target was hit, and now let's assume somewhere here, wave 4 pullback is happening. So let's just say right here, right? We have this acceleration to the upside. We're breaking the previous highs right here, right? So let's just say this is potentially the start of a wave 4 pullback. So let's draw out, let's plan it out utilizing Fibonacci retracement. So tops of wave 3 to the bottoms of wave 3, it plots as 0.32 Fibonacci somewhere around the daily 50 EMA there again. So now let's see what happens. So we're continuing higher, boom, we just kind of topped it, right? And then formed this bearish high test, but let's see what happens. Yeah, we continued, right? So we had topped that, let's rewind. We topped it, formed this massive bearish high test reversal. So that's the end of wave 4, right? So it came very close to 0.32 Fibonacci. And now we're continuing into wave 5 target. So using Fibonacci extension from the top of wave 3 to the bottom of wave 3 to the pullback of wave 4. gives us some potential targets. And interestingly enough, 0.618 lines up with the previous lows, right? So obviously the first potential target is the bottom of wave 3. Let's mark that in here. Tops of wave 4. And now we're planning that, again, 0.618 is the most ideal target for a wave 5 run. So let's fast forward. Broke the lows of wave 3, and we're continuing. Check it out, we even came back for a retest of the lows, so a lot of times that might happen. It happened in the previous example as well. We broke the lows of wave 3, came back for a retest, and continued farther. That happens. That's kind of like a lot of times we could get a deceleration pattern, like a falling wedge, and this can happen. So wave 5 sometimes can form a falling wedge within it or a descending triangle within it. And boom, there we are, slowing down at 0.618, which in this case is also the previous lows. Beautiful. Then boom, bullish engulfing. So now we can say, hey, this is the end of wave 5. We have hit 0.618, target hit. So if we took any short positions right here, the target at wave 5 has been hit beautifully, which is exactly what we want. So a lot of times, this is where the trades will be happening. As we had this bearish engulfing here, starting this wave 3, this is where we're entering, targeting 1.272 or 1.618 for wave 3 target. In this case, when the pullback happened, wave 4 pullback, and we got this bearish high test, at this point we can be looking for short opportunities targeting 0.618, right? In this case, boom, it hit wave 5. I would say at this point, this is the potential end of a wave 5 because we hit the targets, we hit the previous lows, and we have this bullish engulfing reversal candlestick, right? And now, boom, we exploded. Check it out, right? So we broke the highs, and now I would say this is what? This is the start of wave 1, right? So let's see what happens. We're slowing down. Look at that deceleration. Tweezer tops right now, but it popped a little bit higher. Now bearish engulfing, slowing down. We're slowing down, and this is potentially the end of wave 1. So at some point we could have a pullback. Right now it seems like a pullback might be coming in. So to measure that out again, this is a wave 1 breakout. So we're looking for a wave 2 pullback. So we're using Fibonacci retracement, measuring the wave 2 pullback. So let's just put a 1 in here. And hit 0.32, rejected 0.32. So I would say now this is a bullish engulfing. I would say this is the end of wave 2. And when you're looking at price action patterns, what do we have here? Think about it. Look at it really carefully. What kind of price action pattern do we have? Left shoulder, head, breakout, right shoulder, inverse head and shoulder pattern, bullish engulfing. This is potentially the start of a wave 3 run. So to measure that out again, bottom of wave 1 using Fibonacci extension, top of wave 1 using Fib extension to the bottom of the pullback of wave 2 gives us this Fibonacci extension. So the first target for this could obviously be the previous highs, right? Or you can push it all the way up to 1.272, right? So let's just see. Boom, hit 0.618, started stalling there, broke it, and got some volatility, crazy volatility happening. But let's see if we end up hitting 1.272. We hit 1.0, boom, massive acceleration to the downside. So sometimes, again, wave 3 is not always perfection. It can get a little bit tricky, but the main idea is that this entire wave will go somewhere to 1.272 or even farther. Now, obviously, we can have pullbacks here and there within it. And sometimes they even come short, right? It doesn't always go all the way up to 1.272. That's why we always need to have a good management technique and so on, so that if we're in this long position from the lows here of wave 2, if we took this straight to the upside, we still need to have a management position because sometimes targets are missed and we need to have a management technique to actually exit positions. And later in this masterclass, we have 3 different management techniques that you can utilize so that if targets are missed, you can actually exit for profit and take your profit and move on. But check it out, in this case it already hit 1.272. It got a little bit tricky, got a little bit messy in between there, but 1.272 was still hit, right? And that's how you apply the Fibonacci retracement and Fibonacci extension within the Elliott Wave Theory. Now I can continue going, showing you more and more and more examples, but again, this is how it works, right? This is the general idea, and we're going to come back to this general idea later in the lessons as well. But for now, I think you have enough information here. Let's come back to the drawing. Check it out right here again. When we're looking at this drawing, this is how it should look like, and you know, this is a beautiful just example of how it should look. And obviously I showed you a couple examples right here, or 2 or 3 examples, again laying this entire foundation, this Elliott Wave Theory, on actual live charts to see what it looks like with real price action. And you saw it played out beautifully, from the pullbacks to 0.618 or 0.3 to Fibonacci, to using Fibonacci extension as the targets, and those targets were being hit beautifully again within that trending market. So again, the idea with the Elliott Wave Theory is that it's applied in the trending market. Now when the market is moving sideways or consolidating or ranging, the main idea is that Elliott Wave Theory works when the market is trending. This is just another beautiful example of that. So that's it for now. Later in the next lesson, I'm going to go a little bit deeper into this drawing right here that I just showed you. I will show you what multi-time frame analysis should look like, and I'll also explain what happens after the wave 5 finishes. What could we get when wave 5 finishes? So for now, that is it. And like I said, in the next lesson, I'll show you a little bit more when it comes to multi-time frame analysis and build on this concept even more, and then we'll conclude with the Elliott Wave Theory. And then at that point, you should have a very good understanding of what the Elliott Wave Theory is, how it works, how it functions. And then later in the lessons, we'll actually see it again being applied over and over and over again within the strategies themselves. So that is it for now. I'll see you in the next lesson.